Hi, good morning, guys. How you gonna say you know this year? Good morning, my people. Good morning, guys. What's up? How are we all doing? Sorry, I was muted all along. Uh, we're having NFP today. Today is NFP Friday, and I'm glad you're all on the call as always. So let's get right into it. Okay? Um, so here are a few data and statistics that I would love for us to keep in mind. Okay? And one of it is the fact that we can see strength in the dollar technically, and we see poor living interest rates, same and similar, which is is very paramount in terms of overall outlook of the economy. And he also clearly stating that okay, the economy is going to be in dovish conditions. Nonetheless, he's still not going to cut interest rate. His policy statements sounded a bit dovish rather than hawkish. Okay, but this is just the very less of it. Okay, this is just like the very less of it. So I want us to look technically at the dollar this morning before we go further to any other pair. Okay, so let's put on the XY. Okay, and take a look at the XY now. Everyone is asking, where did this strength come from? You know, everybody's looking and it's like, where did this strength come from? But let's look at it. Okay, let's look at it from a bright side. The dollar didn't just start moving from anywhere. The dollar is coming from a monthly level. The dollar is coming from an order block on the monthly. That's where the dollar is coming from. So now when you look at the DXY, this month's candle just closed bullish. So we can start to see what we can start to get a hint that what prices would continue to push up, because we had a monthly bullish close. Not only did we have a monthly bullish close, we had a monthly bullish close in a monthly fair value. So you see that we have this break of structure here. Okay, and since Powell isn't going to be cutting rates, and he hasn't as well hinted if he's going to be cutting rates in what do you call it, in September, although Trump is blah 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 blah, he's just talking, and he's saying that Powell told him he's going to be cutting rates sometime in September. From Powell's statement, he clearly stated that although the economy seems like it might be doing well, but the issues of tariff and all of these things are affecting, and inflation, as much as it seems like it's good, is still not favorable enough to a lot of people, within the country of the vicinity. And over time, these tariffs are going to affect the prices of goods and services. So he's trying to create a balance. He's trying to find a balance. He's using data and statistics, and Trump is trying to force the independence of the Feds out of the curtains, and that's what Powell is not going to allow. Now, secondly, is the US fiscal body has stated that in just a short period of 6 months, they've been able to recover about $25 billion in tariff returns. But now, Powell did mention in his policy statement, or during his speech, stating that these returns are actually not even inflow. They are more like sub balances. So what sub balances are simply as like, instead of me to pay you 5 billion, okay, I would take away 5 billion from the money you're supposed to pay me. That's basically what it is. So it's more like it's like balance, like a balance of payment. Okay, I'm supposed to pay you 1 billion for importation. Okay, I won't pay you this 1 billion for importation. Rather, what I would do is, when you want to import into my own country, I take away 1 billion out of it. It's not that this money is an inflow into the economy, you get. And nonetheless, that still doesn't change the fact that these tariffs are also going to be a problem over time for him. Now, looking at the charts technically, okay, what I want you to first identify here is identify that we have a valid support level here. First of all, where prices are coming from. We also had a break of structure here at this point. Okay, we had a break of structure here at this point. Not only did we have a break of structure, but we are finally in where? We are finally in discount territory. So this was since May 2021. Okay, let me just make this white. So how do we do this again? Use one color. Okay, so you see that we have finally done a full-fledged retracement into discount levels, just around the 70 level here. And what do we also have here? We have this other block here that prices have just tapped into. Now, not only do we see that, but we see a monthly close. Now we've gotten a monthly candle close at this level, and what do you see here? An engulfing candle. So we have an engulfing candle here. Now this engulfing candle is our key to understanding that the dollar is actually getting bullish again. So what we now want to do now is we want to scale lower to like the weekly time frame, and let's see what's on the weekly time frame. We can see that this week has been extremely bullish, when just right after we tapped into this order block fair value area, prices went bullish. What price action did we see there? We saw a hammer candle, and then we saw this engulfing candle here. And what did we then have? We had a morning star candlestick formation from 2 weeks back, and then we had prices push up, then we had the retest, and then now this week we have this explosive move to the upside. Now if NFP numbers comes out as good as they can, we are going to break above this structural high here at this point here, or we might even go higher to see that we take away the last point of where there were active sellers in the market and sweep them before we get any pullback next week and continuation. Or we might just continue to ride next week, because we've seen it happen not once not twice. Prices just keep moving to the upside like that. Now when we come back to the daily time frame, this is where our key focus is on now. And when you look at the daily time frame, you can see that the most promising highs right now is this high here. This is the most promising high. This is where the expected liquidity is resting. This is where the target liquidity is resting. And until prices actually come for this target liquidity, it wouldn't stop being bullish. At best, what we get is we get a minor retracement back into these areas here. We get a minor retracement back into these areas here. Okay. And then we continue to move into the upside. Now, why is this area a valid place for us to be looking for a retracement? That's because when you look here, you see we have a previous support, we have prices act as a support, we have prices act as a resistance at this point, and we also have prices act at a resistance at this point. So what makes this, so what does this become? This then becomes a key level. So now we have a key level at this point, and not only do we have a key level, what we then want a revalidation of this key level. Remember, I always talk about revalidation. So this level has proved to be a support before, acted as a support, acted as a resistance, acted as a resistance. Now we've broken above this level, so we need a revalidation, or most times people will call a retest, but I call it a revalidation. Why I use the word revalidation for me personally is because I like to keep it in mind that this is the valid point, so I need it to be revalidated to prove to me that it's good enough, a key level. So when we get prices coming to this point, for instance, now then I want to see the price action here, and then we might go higher. Now that is if prices does not fly today, because if NFP numbers are good, then we're definitely going to see prices fly to the upside. But if prices don't fly to the upside and probably come around here and fail to break these highs this week, would not see these highs get broken again. So what we're going to see is, since prices fail to take away this weekly highs here at the end of the week, and it's also a very strong resistance point on the daily chart, what we're going to get is we're going to see prices finally come back to revalidate this level, and then we'll continue the move to the upside. So if you ask me, we're starting to see bullish conditions on the dollar overall again. So why are we also saying that? We can see that we have this low, we have this low. Then once we get this other low, then what would then happen? That then solidifies what our bullish trend to the upside. See, very easy, and I'm sure I'm making it as easy as possible. If you're on the call and you've gotten to this point so far, don't forget to hit that like and hit that subscribe button. Don't forget to share this link to your friends and everyone that needs this information. You see that trading is difficult, but it's not as difficult as you would expect it to be. And I hope you guys can hear me. I hope you can hear me. If you can hear me and you've been following so far, just leave something in the chat section, guys. Okay. Okay, thank you guys. uh okay. I see you all, RGD Peter. Thank you guys. Thank you guys. Thank you guys that you guys can hear me. Sorry, I was trying to make update to other channels. Okay, so yeah, back to what we were talking about exactly. So this is this is what we would be expecting when it comes to the DXY. Okay, now let's look at gold. Ooh. So I took this gold trade yesterday, yeah, but when I took this trade, I genuinely wanted to call this trade out. But here's why I didn't call the trade out. I was a bit skeptical about the trade. Okay, I was a bit skeptical about this gold trade, and why I was skeptical about the gold trade was market was giving me, oh, I'm going to go higher kind of situation. So I was expecting prices to come to somewhere around 3317. You get, I was expecting market to come to around 3317. That was exactly where I wanted prices to get to. But then prices stopped here. Although you can see what I explained to you guys the other time. You remember, see, if you've not watched the video on trend lines, if you haven't watched the video on trend lines, okay, if you've not watched the video on trend lines yet on my what do you call it, on my YouTube, please watch that video on trend lines. Like, you would gain so much about how to use trend lines from it. Remember I told you guys something the other day. I said when a trend line is broken, yeah, so we have the market going like this, okay, and we have a trend line. We don't look for just the break, do you understand, of the trend line. We look for the break of what? We look for the break of key structural level. Now, what do you see here? We see market doing what? So, as always, I don't like to dirty my charts where I have my analysis on. So, let's go to another chart. Okay, let's use Pepperstone. Pepperstone 2 is very good. Okay, so what you notice here now is the market already has proven bullish. I remember I told you guys not to buy at this point. A lot of people were trying to force the buys here, and I told you guys there were no buyers in the market. And I clearly mentioned in the channel that what we're seeing here was a bearish wedge, okay, or a bearish flag pattern, but I prefer to call it a wedge because this pole is not long enough to be a flag. So this was a rising wedge. So this was a bearish rising wedge. It was going up, and I told you guys that it was going to break out, and it did break out. Now we didn't take this move here, but when I sent the analysis, some people took the move, and that was very impressive. That was peak, spot on for people that took it. I think there's this guy on my channel, Fruitful also. He took the sells. I think another person took the sells too in our channel. So this was the clean move. I cut this move here. I cut this one down. Okay, but now something happened. Prices started to pull back up, which obviously is supposed to happen. Why? Because we've broken out of a pattern. Now, what move was that supposed to create? It was supposed to become a retest back of this level. But now, because this level's retest was not solid enough, meaning that prices will need to focus more on this prevailing trend before this level. So it did break out of it first of all before coming back. So what then happened? So let's clean my chart now, okay? So this was what happened. So prices left this huge move to the downside, okay? So we had a full blown from this level to this level here. We had this full blown move. So this was a swing to a swing low at this point in time. So what did prices do? Prices targeted the liquidity that was resting within this move. And where was that? That was 1 and that was 2. So we had all of this level here as valid areas for what? For possible retracement. Why we didn't use the 61.8 was because the 61.8 levels has liquidity around it, so it's not going to be valid unless it is swept. See, these are nuggets that I'm giving you guys, so better learn. Don't go and be looking for other blocks at 61.8 level. Don't go and be using 61.8 level when you can clearly see liquidity. You're just going to be killing yourself. Okay, so prices then came into this level. Now prices came into this level. Although I wanted higher, I was looking for prices to come within this range here. I wanted this area here at 3317, 3319. That was my initial area to look for the sells. But something happened. Prices didn't get there. But then I noticed something after that. And what did I notice? That this market had already created a short-term range to the upside. Not only did it create a short-term range to the upside, but it was actually a bullish range to the upside. So that means there was a trend line going up to that level. So let's take away this drawing now. So let's plot that trend line. So when we plot that trend line, we see clearly that we had the first touch of the trend line, the second touch of the trend line, the fourth touch of the trend line, and we also had like a minor touch before the break happened. So what do I then see? I noticed that since the market was bullish, creating series of what higher highs and what and higher lows, it means that a valid key point would have been where this structure touched this trend line here and this point here. So what did we see? I then saw the break of this trend line, and not only did the trend line break, but it broke the key level, which is this point here. So now what has happened? We've taken out structure and we've broken trend line. So since we've broken trend line, we've taken out structure, and I expected what prices to move back to create a retest. Now not just a retest of the trend line, but also now pairing smart money confluences. So this was what I was talking about, smart money confluences. So what did prices do? Prices came back to where? Prices came back to the originating order block, what? That pushed prices to break structure. So now prices did what? Prices went back to mitigate this level and then started to sell off. Now I took my trade right after the change here, after the change in state of delivery. Why? Because this was where the buyers came from on this trend into this level here, and then the sellers took them out. So the moment I noticed that change in state of delivery, like I always do, I took my sales from this point. So are you following? So you see the importance of not just a break of trend line. You know, a lot of people do this thing where they get a break, they go to get, and then they just enter. But you're avoiding that the fact that this is the major low here before this high. So you need to pay attention to structure. See, that's why structure is key. So in everything you're doing, structure has to be a major part of it. It has to be a major part of it. Without structure, then it's a waste of time. Okay, so you see this happens here, and then you get something like this. Okay, you see a lot of people trade trend lines like this. Okay, and then they get one small break here, and then they want to retest, and then they want to enter. Most times what happens is they just get stopped out and continue, because by the time you look at it, the trend line is also still showing you structure. So you see this high, this higher low is still active, this higher low is still active. So if this higher low is the one responsible for creating this higher high, why are you trying to just take a break and retest here and try to enter the trade when this low at the end of the day has not been validated? So regardless of how you're viewing your trend lines, you have to also include structure in it. It's very important. Structure is paramount in everything you're doing. If you're following me so far and you've been on the live so far, please, you know, leave something in the chat section. Say you're following me. Put a fire emoji in the chat section. Let me be sure that you're following me.